Yo guys, Leggy here and welcome to a new video. Today we're going to be talking about, will we actually see a full-blown crash in the stock market? So if you guys don't know, it has recovered slightly in the last few days, but on the 13th of March, the S&P 500 actually reached correction territory. So what is correction territory? Correction territory is basically when you see a decline in 10% from its all-time high. Now, this is actually really interesting because if you guys don't know, the S&P 500 actually experienced two back-to-back 20% annualized gains, and this has only been seen last in the mid-1990s. So a correction tends to happen on average once a year, with 56 occurring since 1929. Now, this correction would actually turn into a bear market if we saw it drop by 20%. Now, earlier I said that we have seen 56 corrections. Basically, 22 of these 56 corrections have actually been bear markets. So that's about a 40% rate. So what has actually driven this massive price movement recently? So firstly, you guys are probably aware of Trump and the massive trade tensions that have happened. Trump is introducing tariffs, and this increases uncertainty in the markets, and uncertainty is not a well-valued thing in the stock market. People can deal with bad news, people can deal with good news, but uncertainty, people struggle with, and it obviously increases volatility in the market. This is because people are afraid that this will cause economic slowdown, leaving less room for the Federal Reserve to actually cut rates. Now, the second thing is obviously geopolitics. Now, it's no surprise that you've got the Ukraine-Russia war, which is always in the news, always having a development in it, and also the Middle East also remains in the news as well, just basically causing further uncertainty. Now, the second fear which people had of the S&P 500 is that basically, so you've got the Magnificent Seven, which is the seven massive tech stocks within the S&P 500 index, and basically the S&P 500 got to a point where it comprised of 31% of these seven stocks. So people were saying that it was becoming too concentrated and too reliant on the movement of tech stocks. Now, tech stocks are valued reliant on their future capabilities, and obviously if they fail to reach targets, it becomes less likely that they're going to reach these future capabilities, causing doubt within the market. Now, how do you actually value a stock? Well, basically, you've got a thing called price to earnings ratio, and the CAPE, which is basically adjusted price to earnings ratio, has actually been the highest it's been in being the peak of a bull run in 2021. Now, this high CAP ratio can tend to be actually a sign of diminishing returns in the future, especially as we've actually seen a average CAP ratio for the S&P 500 being about 16, around the 16 mark, which obviously says that what I was saying before is extremely high at the moment. Now, what we've actually seen, due to the 3 points I just said before, is obviously people moving their money into other markets. So you've seen the China index see an increase recently. You've seen people spread their money out into Europe, England, in the FTSE 100, and all of these markets really. And I think it's just to make people actually just a bit more diversified, because because people are a bit afraid at the moment of the US, I believe, especially in these uncertain times. And as I said in my video yesterday, this is exactly what I've really done as well. So in order to hedge myself, I've sort of started investing a little bit outside of the global ETF, because the global ETF is very strongly in America's favour, as well as obviously the S&P 500 is all American, the 500 largest American stocks, in fact. So this is why I've done that. I do think that it's going to be a lot of volatility in the next few years. Obviously not financial advice, because it's just my own personal opinion. But I do think there's going to be a lot of volatility, and there's going to be a lot of more announcements by Trump in his term. Do I think that this will cause a decrease and will go into a full market? Now, I'm not entirely sure what will come. And I don't think anyone will fully understand where the market will be heading. I think a lot of people are edging towards there's going to be a bit more pain before the markets go back up. But because we don't know where we're heading, the approach I've actually gone with is holding quite a bit in cash. I'm going to dollar cost average, hoping get the best out of these lower prices. But I want to, have a strong cash position just in case we do end up going quite a bit further. Obviously, the 2nd of April will be a big tell in what direction the market's going to be going, because that's when tariffs will come into place. Obviously, Trump will have to say, announce a bit more what he's doing in that respect, so that will clear up a lot of things. But yeah, as I said, I'm just trying to hold a bit of cash just in case we do go down further, whilst also I have put in a bit of cash just to hold a position to bring my average down from what we saw the all-time highs. I'm down currently around the price we are now, which is quite good, but obviously if we see a further decline, I'll just continue trying to dollar cost average down. But obviously this does mean that I have actually gone into the other pie I was on about, just to diversify ourselves away from America, because what we have seen from Trump is that he very wants to take America from the rest of the world a little bit, which has been an interesting take. I think he will buckle eventually on some of his claims, but I do think he'll hold firm for a while. But yeah, guys, I think the best thing that everyone could do is really just approach themselves for either way it can go. Yeah, tell me where your guys' thoughts are on where the market's heading. I do think that we will go down further. Obviously, it's just important to realise that there's something called a discount bounce, which is what I think that we have experienced a little bit so far. It's where you see a small recovery before further decline. And it's just interesting to see that obviously no one wants to get trapped. If we do see a small increase, you don't want to be like, I want to get caught up in this and just stick everything in because that was the bottom, because that could very much be the case. That could very much not be the case, and we could see a further decline. More announcements as well. Obviously, Trump is a very vocal president. What you've seen with previous presidents is like announcements here, there, one every few months, whereas I think we've got more announcements from the POTUS Twitter that since his inauguration than we have from previous presidents in almost the entirety of a year. So I think that will continue to be the case. Now, what I do want to say is if you are looking to invest in periods like this where you may see a long period of time where the markets may not go up, or you may not see the returns on your investments which you're expecting, this is where risk management comes into play. So obviously if I was to lump sum invest, but I may need that cash in the next 5 years or so, you may obviously want to look at your other options. You may want to look in a cash ISA where you'll see that that fixed rate of return, and you'll be able to get your cash directly out at any point, because although, as I said, volatility in the markets could be a great opportunity to propel you forward when the markets do eventually go back up, the thing is to realize is that no one knows when the markets will go back up, or how long this could act, or what could play out. So you could be holding stocks for a prolonged amount of time in the red. So this is why obviously in November I wanted to readjust my risk tolerance. So that's why I sold a lot of my stocks while in profit. I wanted to, one, simplify my portfolio. Two, I also wanted to do a bit of risk management for cases like this. I was a little bit too deep in myself. I had a little bit too much cash. I had a little bit too much invested in the stock market compared to my total net worth, let's say, which meant that if, in the event of a stock market crash, I would be in a bit of a sticky situation myself. So that's what I've tried to fix, and that's why we're dollar cost averaging in, and we're keeping more cash. But that's why it's important for you guys, if you are looking to invest right now, obviously we are in a very uncertain time, and it's just knowing that if you do, there's no point putting obviously cash into the stock market that you may need in the near term. So obviously, just to summarize what I just said there, basically, if you do have the cash, then obviously this volatility may be a good opportunity to propel yourself forward and make gains next time the market goes up. But if you may need the cash in the near future, and it may not be the best time to invest with cash which you don't know if you need it in the near term. That's why I'm making sure that I'm only investing money that I don't need in the short term, and money that can remain invested in the stock market in the event of a crash. Because obviously I've got a really long-term horizon. Obviously, for what I'm investing now, I don't want until years and years and years down the line, more towards, in my head, I'm thinking more towards the retirement end. But yeah, it's just something to really look out for. But yeah, guys, I hope you guys did enjoy this video. Please leave a like and subscribe, and I'll see you guys next time. Peace.